The big macro view really coming in, but also what's the outlook for equities in 2016? We've got Vikas Gupta of Arthveda Fund Management who's joining in for a quick chat. Vikas, good evening. Thanks so much for taking time out for us. Let's start by understanding, first about the indices that you folks at Arthveda have launched for the developed markets. Why the interest? One would assume that it's because you're betting on some sort of material recovery.
Yeah, so what we have launched is what we call the Smart Alpha suite of indices. This is on the developed markets, which is primarily US, and the international developed, which is Europe, UK and Japan. So this series of about 15 to 20 indices, and that will include some from India as well. And when you invest, it's not just that you invest in US. Within US, again, there is an asset allocation from large, mid, small cap, growth, value, core. So we have a full style box which we have created, which is, instead of the core, you would have smart value, which is exactly same stocks or nearly the same large cap stocks as the 500 top companies, but in our own discount to intrinsic value proportion. So you get all the stocks, but you get them at a cheaper price. Now, on the other hand, when you go for value, typically you're looking at a yield, you're looking at support on the bearish side. So we have something called smart income, which gives you about a 5% yield on the NAV. And then on the growth side, we have a different tilt from the typical growth, where you just look at either the high PE companies or typically at very fast growing companies, but without looking at their valuation, what you're paying for it. So we've created a Smart Alpha series there, which replaces the standard growth, and you get growth at a discount to intrinsic value. So we've done that for large, mid, small caps, rather total caps, as well as for the European, UK, Japan and the Indian markets.
Because 2015 was a lackluster year for Indian stocks, at least the large cap basket. Do you see equities outperforming much better in 2016? And what are the key risks also which you would highlight for our viewers today?
As far as the Indian markets are concerned, yes, the risks remain, but I think people are looking a lot too much at the risk side of it. I would rather look at the opportunity side of it. That's where the situation is. Look at the valuations, look at India's position in the emerging market. It's one of the fastest growing economies in the world. In fact, in any large economy, it's the fastest growing economy in the world at 7% plus. We might get surprised in a year or two on even higher rates, possibly. I mean, I wouldn't be, that's a possible surprise on about a double digit. Okay, that's one of the things. On valuation side, it's very cheap. People look at in a year or two on even higher rates, possibly. I mean, I wouldn't be, that's a possible surprise on about a double digit. Okay, that's one of the things. On valuation side, it's very cheap. People look at PE and it looks expensive, but you look at price to book. The median price to book is about 3 to 3.5 for Nifty. Today it's at about 2.8. So it's significantly below the long-term valuations. And where does the money go? China is in trouble. Emerging market allocation, even if it's reduced, it has to come out of China, and so it has to be underweight China, underweight a lot of emerging market commodity-driven countries, and a little bit overweight on India. That little bit overweight is significant for India. It's today about 8% of the emerging market basket in MSCI. If it goes to 9 or 10, that's a huge difference. That's a lot of money coming in.
Right. So in that situation, which are the sectors which, according to you, would attract much more stronger flows in the new year? Exactly the sector that you are bullish on.
For us, we look at the quality and whether quality stocks are available at undervaluation, at a discount to their intrinsic value. And that's where we see technology primarily as one of the largest group of stocks which are very, very safe and which have a high likelihood of reaching their fair valuations, which means there's a huge upside there. Secondly, there is financials. So you have to pick and choose here. It's not blindly, you cannot buy. While on technology, I would say you can be a little bit less careful, but on the financials, you have to be very careful, but there is opportunity there. And third for us is and this is where people differ from us, but we think basic materials, some of the PSU, cash-rich PSUs, is where the opportunity lies.
Since we're talking about opportunities, Vikas, within the financial space, what is it at this point that you like? Is it the banks? Is it the NBFCs? Or even the insurance companies, given that, they've really been grabbing the headlines of late?
Yeah, so there are a couple of private banks which are attractive and not the overvalued ones. Okay, and there are some large NBFCs which are in multiple businesses from across financial services. Some of those are very attractive, I think.
Right. Because what about the fact that, mid-caps have actually outperformed in 2015 versus the large caps? A trend that you think will stay?
Well, we think the bigger opportunity does lie in the large cap space. As far as our models are concerned, that's where we see. But mid-cap is a place where also you will get a lot of undervalued stocks. But you have to be very careful since it's not as undervalued as the large caps.
Right. Because any specific sector which you will watch out for in the mid-cap space?
Again, we would look at the tech companies, and the number 2 would be auto ancillaries.
Right, because there's also Q3 earnings which are around the corner. What's the expectation there?
Q3 is difficult to say. Okay, it's not going to change significantly in the near term. Okay, but we should start looking at the longer term and somewhere mid next year, FY17, and that's where what all the sectors which I mentioned are going to be the likely playouts.
All right, Vikas, we'll let you go on that one. Thanks so much for joining us on the show today. Let's also get you some more market opinion going as far as outlook for 2016 is concerned.